Good evening, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the day before Thanksgiving. Boy, I can't wait. I want to eat tomorrow. I love Thanksgiving. You know what I don't like about Thanksgiving? I don't know about you. It's like the beginning of family arguments when you sit around the table. And I don't know why. It's like Christmas, you know. Sometimes everybody makes out that it's a beautiful time, and I don't know, maybe some of the family members are dysfunctional, but I find that that's where you walk away and I hope it's not that way at yours. It doesn't have to be at mine. Actually, we're not going even to family this year. We're going out with friends to their homes. You know, we had the PCE today come out, and the indices came out as I saw them. Pretty interesting. Number one, let's start with the income. It went up a fraction, nicely, I think 0.3, and spending went down 0.1. So that's pretty good. The other part of it is inflation is doing this. We've talked about it. Inflation's in a rough spot. I don't know the next goal. I don't know how you get it down from this next level. We knew, and if you go back a year and a half ago, we were talking, it's easy to take it down from 9–10% when we had the COVID epidemic, drive everything up. And taking it down hard, 7%, 6%, yeah. Getting this last mile to the 2%, I don't know if it can be done in America. Trump's bringing on new policies. You get a change of government. I don't know if what he's going to do is going to be inflationary or not. I've heard all the articles, but I'm just going to say I don't know. Number one, I don't know what he gets actually through. Tariffs on their own are usually inflationary. Why? Because we end up paying for the higher good. But the threat of tariffs does get countries to do things. Why? Because we as America are the biggest. We're the biggest economy. We take in the most. We can get things done. So be it Canada, be it Mexico, I do not believe we're going to go into trade wars with either. I think that those areas will be resolved much easier with Canada. I think really easy. I think difficult at first with Mexico. They've taken in a lot of new manufacturing. They're looking abroad. They want to get things. But at the end of the day, we're their biggest trading partner. Do they want to put up an iron border? Not only the border wall, I mean a real border wall. I don't think that that's going to happen. I don't think we want it as a people. And I think the new president, she has to get her legs under her. And she'll do fine. At the end of the day, this thing will calm down. It won't with China. I think there's, until President Xi decides to end this, what he's doing, and the supporting and making things where, you know, it's just not real cash, it's government cash, that isn't going to change. For 4 years, could he finally get along with President-elect Trump? Yeah. If you don't think that can happen, don't be foolish here, okay? That can certainly happen. You got 4 years. That's a lifetime. President Xi's not getting any younger either, all right? He is president for life for all purposes. We don't have that. But you got to look at J.D. Vance because the Democrats have a big problem ahead of them. So you got to look at the number 2 man, and this is another young Trump in the wings. So anything can happen. You don't have to buy into what I'm saying. I get it. But we saw self-destruct in the Democratic Party, period. And I'm watching Kamala Harris on TV as she's holding these crying rallies and what's happening. Simply put, she did a terrible job on the border, and Biden allowed inflation to grab hold. End of discussion. That's where it ends, okay? Not about the people. Those are the two elements that did them in. So I'm looking at the PCE, I'm looking at what's going on, and I'm looking at our time where we're at. You do normally get a Santa Claus rally. Do I think there's anything out there to upset it? Nothing I can see right now. Nothing. Will the Fed go with a quarter-point Christmas cut? It could very well happen. You know, they may just do it and then say, we'll hold off in January and so on and feel good about things. But if you really look at the data, you've got to go to next week to make that decision. Next week, you get the JOLTS report, ADP, private employment, Challenger Gray corporate layoff numbers, and then it culminates with the jobs, U.S. jobs report. Once I'm there, I can make a better decision as to where we're at. Right now, the probability is 70% on the CME FedWatch page that there will be a 25 basis point cut. All right, let's go to XRT. And by the way, before I do this even, I want your help. What do you want me to cover next? Friday's going to be right on us. I'm not going to do any reports tomorrow. It's Thanksgiving. But Friday morning, I'm going to be coming out. I want to know what you want me to cover next. All right? So write me here. All right? And I do look, and we'll see what you want me to do. So the question is, in the retail, what's going on? You know, you're seeing some companies doing phenomenal, others doing terrible. I am hearing from one set of numbers that I'm reading, a 9% increase in spending overall. Don't know what that buys because of inflation. I'm hearing other numbers coming out that no, a lot of the retailers look for a flat to just slightly higher Christmas season. Well, when you adjust for inflation, I don't know what that means. Are we going to fill some of these gaps becomes the first question. The market still has the pattern of higher lows, higher highs. You get into a bit of problem if you take out 82.11. What that would do is give you lower highs, lower lows, and you'd start, and I'll come back here a page, you start filling in this gap, you might even go to the second one. So I think you're right at a very, very important area in the market. Moving averages, they're moving up every day. 79.60s, the next what I call line in the support for the market. And interestingly, it comes in right against this last gap. Now, you don't have to go there, but if you go on this chart, how many gaps do you see that don't get filled? So I'm going to stick with what I teach. And in charts, after the many years, you learn that gaps are like a magnet. Markets like to go back to them. When we take a look at where the market's stopping, at the end of this, I'm going to be putting out again the Bollinger Band ad that I have. If you haven't learned how to work with Bollinger Bands, shame on you. Because if you take a look at their goal of what they do when they're hit, it's so darn important. And you learn how to take them and move with it on the momentum. Are you embedding? Are you overbought? Are you just neutral in it? It gives you a guideline. My course teaches you this in just a few chapters. I swear to you, if you're not a football player, okay, tomorrow morning, if you take the course, you'll be through with it in the morning. It's that simple. And you start applying it. That's the real key. The course isn't going to inject in your vein knowledge. It's going to give you what to start looking for, and then you get with it my morning videos, and then I start talking to you right through it. I think it's a neat way to learn. But you take a look at that, you see the importance of it. Could this be where finally we're going to get a correction out of live entertainment? Maybe. You need to lose the embedded reading with a number under 79. Then I could argue you'll get back to the 18-week average. Right now, the pros are buying it. They're not looking for big corrections until that red line closes under 79. CrowdStrike, what did we just talk about? I want to come back here. This was yesterday. And if the market loses the embedded reading, be careful. You could make a run back here. I've said this to you for a while. Bingo. All in one day. So now the market has to now prove that it's okay. Again, today was noise. You saw Dell take it on the chin, Hewlett-Packard, CrowdStrike down 5%. This is a great security firm if you've got as you're running your organization on the internet. There's two other companies that are excellent as well. I like this company long term, but I don't like buying these vertical price rises. They end up one way. Generally, if it's a quick break like this one, you give the money back like that. You worked real hard to keep going up, and you took back it all of a sudden. Rivian. Now the question for Rivian, what's important to me, will the Trump administration stop the $6.6 billion that the Biden administration is approving as a loan to Rivian to build that Georgia plant? If Trump stops that, I think he gets highly criticized by people saying, he's doing that because of Musk. Musk doesn't want $70,000 cars to compete with his top-end cars. You can't get away from that argument. So I don't know. I know that buying over a Bollinger Band into the first challenge of the 200-day average, you do it. I wouldn't want it. But you know I'm friendly. You know that I thought the market here, $10 was probably the spot where the market was bottoming out. And I think you'll look back a year or two from now, this will probably be the right company to own. If it gets under, let's say if it gets under here, these lows again, I'm wrong. Got to have a spot where you're wrong. We're getting a bit of a rally out of the Chinese interests. Okay, congratulations. But you're going to see resistance, I think, at the 18-day average unless something magical happens. Tonight you lost, going home, the bearish reading. You got a reading at 2283. Anything over 21, out you go because you were embedded. Game over. Now you just want to let it rebuild. Be careful of all these builders. I know we saw the pending sales and everything that's come out, but I'd be careful here. If you get under yesterday's low, not today's, you could get a back and fill in this market. You're overbought at the Bollinger Band fighting a battle for that. And in the home builders, the pattern's identical. So be a bit careful right here. It's nice that the 10-year notes have fallen back into the mid 425, 426 area. I like that. But it's still not under 3, and that I don't like, and that's what you really need. You need mortgages to come down a bit. Financial services love these high rates, and there's nothing here that's showing weakness yet. You're embedded. You know, a warning sign would be if you got under 50.76, but barring that, you can still go to the 52.18 level. XLI still bullish, but overbought. I'd be careful. You're starting to get some outside action, the potential of it, and that could be a problem for the market. Energies can fall further. The threats on energy are very real. Now, there were articles today to be read, and I wrote about them in my newsletter. My newsletter covers points that I don't cover here, and I guide you into an area to look. And this drill, baby, drill, it isn't the real world. It's a wonderful thing that our president-elect says. We know where his heart is, but the economics aren't there. At $70 oil, if you give 25% from federal land back to the government as your lease, and that's what you have to do, it's part of the royalty, you end up with about $50. At $50 to drill in new properties, not the Permian Basin, I don't know that you make any money. The cost in America is not the cost of what it is in the Middle East or the Permian Basin. So you've got to be careful where you're drilling from. The law of economics will come in, and that law is not saying that. The law is saying, hey, if energies get on a tear to the upside again, yeah, let's get going if you believe that it's going to stay up for a while. Here's the other negative factor. If it goes up at all, OPEC is waiting to dump oil on the market. That's what they want to do. So be a bit cautious right here on the bull side. In the gold market, you're stuck now. The easy money's over. And notice, you left this island sort of. One day's not truly an island, but you had a gap and a secondary gap, and now you've pulled back. That's not bullish action. That can get filled later, but right now I'd be very cautious in this market. In the silver market, you're breaking down. You could be going in between 26.97 to 37. You have to take out today's high to say, nah, that was just the holiday and it's not reality. And you got to do it on Friday or Monday. Remember, you have an abbreviated trading session on Friday. I think we close around noon, so be aware of all that. In the copper market, okay, so here's the market up, but this is the canary in the mine. And until it really gets bullish, it tells you that industry has some problems. And we've been seeing that. Did you see the Chicago numbers today for manufacturing? Terrible. They weren't bad. They were absolutely terrible. You've got to be paying. Didn't we get this week the Richmond numbers? They weren't good either. you get bounces, but they're not great numbers. And we didn't get a bounce in Chicago. Now you're into the resistance in BND and TLT. You're back up to those Bollinger Bands. Be cautious here. The dollar has let go. You lost your bullish embedded reading. Watch. You're probably going to the 18-day average. And the flip-flop, you're probably going to the 18-day average in the euro. So it's important that you understand these bands. It's important you understand the relationship, momentum with the markets. Take the enhanced Bollinger Band course if you want to learn what I preach about it. Take a look right here. You have yourself a great Thanksgiving. Don't argue with the family, and do eat too much. I will catch up with you all later. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.